We're taking down our earnings target from 180 down to 174, and it's really basically taking into account the impact from the virus in the short to medium term, as well as the delay in the benefit that we were supposed to get from the phase one trade deal. Now, what we're also saying is that a significant portion of this, call it hit, will get eventually recovered in the second half and beyond. So there will be a backloading effect. And on top of that, the virus spread is triggering governments and central banks globally to inject increasing stimulus. And ultimately, when this pandemic, call it, finally fades off, the stimulus will still remain in place. And I think that could result in a hotter economy than we had going into this virus. So that's why I think that, yes, there is definitely some short-term weakness. We've had a pretty big flush in terms of positioning. But I think sort of medium to longer term, we're not changing our view, and we're basically holding on to our price target of 3,400.
That's a gutsy call. I mean, I'm wondering, there's so much uncertainty out there. I'm wondering how you're able to do that. And by the way, Goldman today comes out. They say you're going to get no earnings growth. This was a year in which we were counting on earnings growth. It's really the only reason why the stock market was where it was. We had all this multiple expansion, and to back it up this year, you needed earnings growth. If you're going to take that all away, we could be set up for a real disappointment.
So obviously, I think that depends on the magnitude of the spread, but I just think that's a little bit too pessimistic, basically wiping out all of the earnings growth for S&P. You have certain parts of S&P that are definitely exposed to China and the virus, but a significant portion is not, right? So there could be some indirect hits, but I think broadly speaking, we should be able to weather it. The other thing I want to mention is we've had huge amplification in terms of price action to the downside, basically a large flush by systematic strategies, where we estimate now almost $200 billion worth of outflows. Most of that is now behind us. We were at 80th percentile in terms of equity positioning for the systematic camp. Going into the sell-off, we're now at 35th. So I think a lot of these selling pressures will start to ease in the coming days, if not already now.